preface all of this with, I guess, I don't really know what I'm talking about. So I shouldn't say I don't. I speak with some authority in the sense that I've done a lot of research on this, but I haven't actually, I'm not a tax accountant or an accountant or a lawyer or anything like that. I've done a bunch of research, tried to figure it out. I've talked to some people that are both of those previous things, but make sure you do your own research. Don't take what I say as being some kind of gospel. You can ask me more questions as we go through this. Yeah, if you have any questions as we go along, please feel free to jump in. And I don't, this should be more of a conversation as opposed to simply me standing up here talking. So if you have anything to add, jump in and we'll talk about it. All right, my job was made, I did a bunch of this research sort of a few months ago trying to figure out what was going on in the whole tax world. And what's interesting is that, I don't know, was it last week or earlier this week, the CRA actually released a very fairly comprehensive document on what you should do as far as taxes go. We'll put a link up to that somewhere. I'm not sure if I've actually got one in here. But this was quoted in Forbes earlier. The CRA established a dedicated cryptocurrency unit in 2017 to build intelligence, conduct audits focused on related risks to cryptocurrencies. This unit has enhanced the CRA's ability to monitor and enforce compliance in areas of emerging risk, including the cryptocurrency space. So they're trying to do something, they're trying to crack down and see what everybody's using this stuff for. Hard to believe that it wouldn't have got their attention at some point, but here we are. So in broad terms, crypto falls into one of two categories. The first one is either an income. So if you are actively trading, a day trader, whatever, or if you're acting as a business of some sort, the CRA views that as an income. If you are buying it as a capital good and sitting on it for a period of time, and it's not promoted as a business or service, in that case, it falls into a capital gain. So you can think of it as like a trader on Wall Street, somebody that's buying and selling stuff really quickly. In that case, you'd be treated as income. If you're a guy that buys something and sits on it for a long time, then it would be treated as a capital gain. What's their threshold on that? Well, you know what, we'll get to that. We'll get to that. That is a good question, and there's not a really great answer for it. Basically, yes, I believe it's treated on a case-by-case basis. I don't know if they have an actual threshold, or they certainly didn't give an actual threshold. They kind of gave a few examples that we'll go through here in a minute. All right, let's deal with capital gains. First of all, it's the most common category, treated like a stock or a car you buy, or an investment property, something like that. If you buy a rental house and it appreciates, $100,000, at that point you need to pay tax on it. The good news is it's only taxed at 50% of whatever your standard tax bracket is. So worst case scenario, if your income is over $315,000 in a year, the most amount of tax you'll pay is 24%. The bad news is you have to pay 24%. But for most of us, we're going to be well below that. And so fortunately, it's taxed at a 50% rather than 100% of your income.
Do the provinces also get their hands on
that? That is including the provincial tax.
Oh, okay.
Yeah. So I think it's 32% or 33% and 14% is provincial. This is the maximum amount, and it's calculated the same way. Any other questions? So Examples, I ripped this off straight from the CRA's working from their paper that they just released. If you make a gift, if you sell or make a gift, if you trade or exchange cryptocurrency, including disposing of one cryptocurrency to get another cryptocurrency. So if you're going and trading, Bitcoin for Ethereum or whatever, all of that is viewed as a capital gain. Converting cryptocurrency to government-issued currency, and using cryptocurrency to buy goods or services. So every time you go and buy something, if you go and buy a car using Bitcoin, the government views that as a capital event. So if you've made money on your Bitcoin and then you go to use that to buy your car, you should be paying taxes on that. Yeah?
Is the amount the same or different from the regular sales tax?
Well, it's different than sales tax. So you still have to pay sales tax when you go and buy a car or whatever. But it's expected to be a capital, in the case, if you're assuming you fall into the capital gains category, that's assumed to be a capital event. So if you go and buy something, you have to pay sales tax, but you also have to go and pay income tax because you've just, let's say you bought a Bitcoin for $1,000 and you go and buy a car with that Bitcoin for $5,000. You need to pay capital gains tax on $4,000 of that number. Does that make sense? Okay. Right. So they view it as barter, and there's a whole section on the CRA website about barter. I won't go into that, but basically, if you're buying something using your cryptocurrency, you need to use that, or you're expected to pay taxes on it as if it is capital gains. All right, income. You're treated as though it's income if it's business income and it's taxed as a standard rate if you fall into the second category. And it's up to you to figure out if you need to declare taxes as income or capital gains. Now they do give a bit of guidance here. It's not just entirely up to you. If you carry on commercial activity for commercial reasons or in a commercially viable way. Bitcoin Solutions is probably a business. They've got a sign, they have ATMs, they're running things as though it's a business. I'm pretty sure the CRA views this as an income, not as a capital gain or loss. You undertake activities in a business-like manner, which might include preparing a business plan and acquiring capital assets or inventory. You promote a product or service. Again, the Bitcoin Solutions sign outside tells you they're probably running a business. And you show that you intend to make a profit even if you're unlikely to do so in the short term. So if you're making an investment of some sort and you're willing to take a loss for a while and you're trying to get something going, that's probably going to be a business. And you need to report it as income. A few examples of businesses that they threw out there: mining, trading, i.e. active trading. So again, what that threshold is, I don't know. And if you're running an exchange, certainly if you're running an exchange, the money that you're bringing in on fees and all that sort of thing, that's viewed by the CRA as being income, not a capital gain. So if you're running an ATM, once again. All right, who here, has anybody mind? Okay, so mining. Mining, in the cases of mining, you can deduct the expenses from your tax return. So your hardware cost, the power that's going towards your miner, pool fees, software that you bought, whatever, all of that stuff can all get deducted directly from that. Now, is mining income or capital gains? Anybody?
Actually, I guess that's my actually income. Now, you could go either way, because really, if the money, what they'll treat it as, what you can treat it as, the money activity that you get the Bitcoin from, that would be an active business. Now, if you hold on to the Bitcoin and then turn around and don't always sell it, but you accumulate it and use it as an investment, then that would be a small gain. I didn't help you, did I?
Yeah, well, so here I did give a little bit of guidance on this one. If it's considered a hobby, you're good. At that point, it's capital gain. If it's not a hobby, it's not. So, and this will be decided case by case. So, you know, it is a little bit pluggy, a little bit muddy. Hobby is generally undertaken for pleasure, entertainment, or enjoyment rather than for business reasons. A hobby is pursued in a sufficiently commercial and business-like way. It can be considered a business and will be taxed as such.
Want anyone about when you consider, if they consider it a hobby, that means any losses or any expenses, they'll disallow. So I would say they'll disallow the expenses, but if you have a loss, they won't allow it.
Right.
They'll
Okay.
come back after you for it.
Okay. Good to know. Good
That's
to
why
know.
I said the only we had there, there's expectation over the long term to make money.
Yep.
That's why.
Right. Okay.
For hobby farm.
Yeah.
That's a little bit, that's definitely money, right? Because, you know,
Oh, yeah.
you're taking in Bitcoin as your income,
Yep.
right? Now, the question is, are you sitting on it or are you selling it?
Mm-hmm.
If I'm doing it as a hobby, am I still declaring my hardware expenses and my power costs as income deductions, right?
Yep.
Provide a little loss. That's when you run your trickiness.
Well, exactly. Now, here's the question, you know, if you're basically, you're subsidizing your operation, and you're just paying into it, you're not selling,
Yep.
right? That's your full-time loss,
Yeah.
right?
Yep.
So.
I don't know. Yeah, I know. I totally agree.
Questions that need to be asked, right?
Yeah, sure. No, absolutely. Absolutely.
And I wonder, Sierra Rate's not good at giving answers.
No, obviously, they want it to be tested, they want all these examples to be
Yeah.
tested, and just, let's test it.
Yep. They're in a gray or in a brand new area. They don't really know what's going on. They've the documents that prior to this week, it was really up to well, I think let's find out. But there was a fair amount of clarity in the document that came out this week, or last week. So yeah, it was good, but still not totally clear. All right, so forks. Hopefully the day of all the forks is going to be more or less behind us, but they did not address this at all directly. My assumption is that forks are something like a stock split, so it's not actually, you're not actually required to claim a capital gain or anything like that, or income on a fork, but as soon as you go to sell them, like I said, if you treat it like a stock split, when one splits, you now own two of the same one stock, you don't get taxed on it as if you have twice as much, because you don't, until you actually go and sell. So, but it is sort of uncharted territory. Talk to somebody that knows more than me. I'm assuming that this is the case, but I'm not 100% sure at all. All right. Another one that I thought was interesting was you're responsible for keeping your records for the last 7 years, which is sort of standard tax stuff. Things to include are dates, valuations, transactions, receipts, all that kind of stuff. Whatever records you have of all of your transactions, you should hang on to. The one that I got a little bit of a surprise from was the cryptocurrency addresses. Yeah, no, it's a little bit like, hang on, really? All the addresses that I've ever had in the last 7 years? Okay, I'll work on that. Not sure.
No, actually, I can figure that out.
What's that?
They may not be looking for the addresses, your addresses. They may be looking for the addresses of who you sent money to.
Right. So
That's cash.
So there was a questionnaire that was that they had sent out to a bunch of cryptocurrency people that they were auditing, and one of the things that they had in there were, have you ever used a mixer? Have you ever used Shapeshift and Changely, or whatever the two are? Have you ever used, and there's a bunch of sort of checkboxes in there, and then one of them was, list all of your cryptocurrency addresses, and list all of the cryptocurrency addresses that you've sent stuff to was the other one. So I have to, that was a little bit, it was interesting. Exchanges aren't responsible for keeping any of the records. They're not banks. They may or may not be in business, as we've seen. When you go to try and get those records after the fact, you're like, oh wow, what was that? How much did I trade? What were the volumes? All that sort of thing. They're not responsible. It's entirely up to you to do that. All right, now the fun part. How can I pay less tax? Who's got a great, I want to pay less tax scheme?
Legal.
Nobody? 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 All right. Okay, can you set up a company to lower your tax bill? No, was the answer that I was told when I talked to my friend who's a tax lawyer. I'm like, all right, so can you do this? Like, there's all these guys that sort of have these grand schemes in mind. Can we do that? And he's like, no. Can you move to a lower tax jurisdiction? So you're Satoshi, you're sitting on a whole bunch of Bitcoin. Can you move somewhere else and have that become your new place? You move to the Barbados or whatever, where they don't pay taxes. Can you move there and not pay any taxes? I don't know. Honestly, it's not something I'm interested in, and I didn't pursue that. Maybe, I have no idea.
I can tell you the answer.
Tell me the answer.
The answer is yes, you can move to Barbados. Yes, you can go to the jurisdiction. But in order to do so, you have a separate ties with Canada.
Okay.
That means nothing in Canada, no assets whatsoever, not even a pension plan.
Okay. All right, so you've got to sever your ties with Canada. You got to move there, and there's a minimum. Is it only 2 years?
Minimum 2-year basis.
Okay. So you got to move out. You can move somewhere else and do that. Okay. Okay, we'll make that probably.
Yeah.
Talk to this guy. Because it's not my.
I did tax those many years ago, but I know the fundamentals of like that.
Okay.
But no.
All right, great. Once again, talk to somebody else who knows more than I do, because that's beyond the scope of my expertise by like a million miles. Yep.
By severing your ties, do you mean you're still going to remain in Canadian
No, you
citizen?
can't.
You can remain a, so,
You have to move to the other country. You have to move to the other country. You have to sell all your assets in Canada, everything. So if you have a house, you can't keep your house.
No, I mean your citizenship.
you can keep your citizenship.
Oh, okay.
Yeah.
You can keep your citizenship, but you cannot have any assets here, anything like that. Even if your employer moved you down there, or you're there, and your employer's here, and you telecommute, they'll probably go after you.
Right.
So sell everything except your citizenship and you're okay.
Yeah.
Okay.
Yeah. Sell your house, your car, your health care, all that stuff. You gotta, yeah.
And
Yep.
you saw your wife and children, like Mike says, that helps.
All right. Can you fake your death in India in order to pay less taxes? Well, yeah, sure. Why not? That's it's been done, right?
But I did that with,
Exactly. Yeah, that's right. Briex. See, not enough people get Briex jokes anymore. It's still a. All right. Okay. So the CRA discourages fancy accounting. So people do go to jail for doing this kind of doing dodgy tax things. I personally am super uptight about making sure that I'm paying all of my taxes, not because I like paying taxes and not that I enjoy the process of paying taxes, but mostly because I want when the CRA comes to audit me, which they may or may not, I want to be able to just go, here, it's clean, do whatever you want, I'm walking away, and like, yeah. So I'm not here to tell you to pay your taxes, I'm here to tell you that you should pay your taxes. Exactly. So not reporting, this is from their note regarding digital currencies, not reporting income or from domestic or foreign sources is illegal. Canadians should know that the CRA is very active in pursuing cases of non-compliance in order to ensure the tax system is fair for everyone. There you go, that's what, direct quote from them. So one more time, I'm not a lawyer, I'm not an accountant. If you have any questions that are more than what I have presented with my limited knowledge, we can talk about them here, or even better, if you have any questions, talk to an accountant or a lawyer about what you can possibly do. Yeah?
So just moving, say, your currencies from an exchange to a wallet.
Yep.
Is that considered?
No. That is not considered taxable at all. If you're just moving them around, that's not, as I understand it, that's not taxable at all.
So if you bring it back out of the wallet and take it back to the exchange.
You actually have to sell it in order for it to be taxable. So, or trade it for something else.
If they're treating it like stock, right? Then basically, until you actually sell it or do something with it, convert it, they're not going to do something with it.
Right,
How do you treat
right.
the transaction fees then?
What's that?
How do you treat the transaction fees then?
Treat it as an expense.
Expenses. Yeah.
If
Yeah.
it's capital, it comes off the, okay. It comes off, with capital, what you do is what you sell it for versus what you paid for it. So what you get is the less fees, right? So if you got $4,000 for it, and it was actually $4,100 less 100 for fees, and you paid $2,000, then you got to pay $2,000 for fees.
Right. Right. So whatever fees you have, those are expenses that get tied into your transaction, however that went.
So
Yeah.
You can write off your losses, like if you had, say, bought a lot of Bitcoin and then the price went way down but you still had to sell, is that taxable? Or is that
So that doesn't come off of your income. That comes off of your capital gain or loss. So presuming, and I believe you can carry them forward for 3 years. Anyone? You can carry them forward for a certain amount of time. So if you lose money this year, but you make money 2 years from now, then you can say, well, my loss was this, my gain was this, the difference is this. Therefore, this is how much tax I pay. And I don't remember what the timeline is. I think it's 3 years.
The one other thing too, because you mentioned about stock split. So in a stock split, say you paid $40 for the share, you did a 2-for-1 split. Your value of the share now is $20. So it's what
Right.
you do split for.
Right.
So that's the other thing you gotta watch out.
Right. Yeah, and I don't know how, let's say you buy, and
More complicated.
forks would be more complicated. I don't know how they would expect you to put an initial value on that. I have no idea. Because if you buy, but you buy Bitcoin at $1,000, and then, later on you've got the Bitcoin's worth $5,000 and Bitcoin Cash is worth $100. What percentage of that goes to where? And I have no clue. They haven't said anything.
And for the record,
Yeah.
you have most accountants, they're as much in the dark as anyone else is. And most tax accountants are much better off either. Because I'm an accountant.
Yeah.
And I get access to CPA Canada. I tell you right now, they're all just as much losses as the rest of us.
Yeah, no, and I've talked, like I said, I talked to a couple of people and just sort of, okay, so how does this actually, yeah, the tax lawyer that I spoke with, he was somewhat familiar with cryptocurrencies and whatnot, and this was kind of the guidance that he gave me was, try this, and I'm like, okay, yeah. So.
And as like, I do audit, not tax. Okay? I know you relate to feds, but why they will actually want the list of people you dealt with, it's a domino effect, because we need to look for bigger fish,
Right.
right?
Right.
That's what really it is, look for bigger fish, you maybe the small fish, they really not care about you, but they may want the person you're dealing with.
Oh, interesting. Okay. Interesting. So trying to move up the food chain, as it were, right?
I've done it for myself, I used to be tax administration.
Okay.
We did the same thing.
Right.
We didn't go after the small fish, we went after the big one.
Right. Where did the money go to? Okay. Where did the money go to? And you keep following it. Right. Right.
Do you think there's any hope for the future that the government will just stop taxing like crypto?
Stop taxing crypto? No.
There's only one way
No.
to do it. There's only one way only, is if it becomes cost prohibitive. So I don't know who's ever aware of this, but many years ago, some tax person got this bright idea that they would go in and audit all these people at the flea market. Yeah, that would be a disaster. It
Okay.
costs more money than it would that it brought in.
Right.
So unless that happens, that's the only way it's going to come.
Okay. Yeah, and looking at the survey that was up there, it was the questionnaire that they were sending out to people that they were doing audits from. It was like, okay, you guys are going to get buried in data here. Like, are you really? So who knows? I mean, yeah. Any other questions that I can answer with? I'm not really sure. Is
Sort
there-
of making that question.
Yeah.
Say for instance, like from now for the next year, like say every month you buy $1,000 worth of Bitcoin.
Yep.
So you're buying it at varying amounts. Then all of a sudden, a year from now, you say, okay, a lot more places accept Bitcoin, so you go to Tim Hortons.
Yep.
And you buy a coffee, a donut for $5.
Yep.
With Bitcoin. So you have to keep track, okay, until you reach out the first 1,000, like, yeah, I understand you have to go back to the first.
So that's actually not my understanding of how it works in Canada. So that's the first in, first out. My understanding is that in Canada, it is the average of whatever you paid. So if you buy $1,000 worth of Bitcoin every month for the next year, you spent $12,000 on 10 Bitcoin, say, your cost per Bitcoin is now $1,200, regardless of what you paid for the first one. No, they treat it as an ongoing thing. Again, is my understanding. But as you keep on buying more Bitcoin, when you go to sell it, it's the average of what you paid for all of them.
What if you made a loss?
If you made a loss, then it's the same thing. It's the average of what you paid for all of them.
So then every time you went, like say for the next year or 2 weeks, you went and bought like little things, Safeway, and you have to keep track of what you bought.
Yep.
And then you have to, once you got your average, then you have to say, okay, well, I made money, so this is capital gains or whatever. So that'd be a nightmare to keep track of.
Yep.
If it ever got, like rules of currency, let's say you watch American dollars today.
Yep.
And now your American dollar went through the roof.
Mhm.
And all of a sudden you're getting more than, you're going to buy with the American dollar, you're not like declaring that as income, although you're supposed to be, are you?
Yep. Yeah, you're supposed to. Yep. Yep. Yep.
The problem you're gonna have is they'll look at each transaction independently. So you'll have to see your gain at each independent time. So you have to-
Yeah. So when you pay for coffee at Tim Hortons for $5, that's one event that happens at whatever the price of Bitcoin was that day.
So that's pretty good. So you have to have a book and just keep track of
I don't see it on a quick look on something like that, with how getting a little expensive.
I don't know everything here, I just don't
Yeah.
know the rules here.
Yeah. No, that's.
Pretty much everybody used to do that.
Well, and I've looked before on to try to figure out. I'm like, oh, okay, well, let's look at what what trade I did on an exchange. I'll set and it's like, okay, well, what were my trades on for 2018 or whatever. And so you're going through, and each trade gets sliced up into like 5 different ones because, you know, you're buying from a bunch of different people at slightly different prices, and now you have to go, I mean, it was a nightmare, honestly.
And that's why, like, if you're, you know, if you've got stocks in something with IBM or something,
Yep.
you're not likely gonna cash out $5 worth of IBM stock to buy gold.
Nope, you're not.
And next week, you do something with crypto, you could be,
Yep.
but, you know, with stocks, so to me, it shouldn't be lumped in with the same, because it's just like a nightmare.
Yeah.
That's why it would be nice if one of the Visa cards, we could just use those Visa cards and just convert it into cryptocurrency right away, and that's all you use, you don't
Yep.
use. You know, the fiat system.
Yeah. Yeah. Yeah.
There's no like a cash account,
Yeah, I
just
would
like you would
imagine
a bank account, and because you're not going to trade with that, right? With trading stocks, you have a stock account.
Right.
And then you have savings account at the bank,
Yep.
because you don't pay tax on it.
Right.
Why can't it be the same way for currency?
Well, I mean,
$1,000 into a account.
into one account that you just leave there.
Yeah, you just
Um,
not trade it, just use it for expenses.
And you could, I guess. I'm not sure how they would. I guess the difference though is that, you know, I guess the difference is that in one case you've got stocks in one and cash in the other. You're right, but you could have cash in both. There's no reason not to, right?
There is a distinct difference. See, it's cash or cash equivalents, and stocks are not considered cash equivalents. That's the difference. That's how CRA looks at this. That's what most accounting firms, most accountants look at. It's cash or cash equivalents. And Bitcoin is considered cash equivalent. Whereas a stock, it's not a cash equivalent. It's liquid. It's liquid assets, or it's current assets, but it's not considered equivalent to cash. That's the cash.
Okay. Yeah, like I said, keeping track of every single transaction is a challenging undertaking.
What about the nightmare of people that didn't do any of that and don't have any information? Because I know what's technical.
What if somebody didn't keep track of everything and didn't have all the information on their fingertips when the CRA came knocking? They would audit you, presumably. They would
People who you transacted with?
maybe find the people that you transacted with. Honestly, I don't have a good answer for you. I don't know.
Well, you can look at how nice your car is and see.
Yeah, I mean,
Probably can't take it.
yeah, they can do, you know, they can basically look at your net worth and go, well, you know what, to be living like this, you had to be making this much money, and you weren't, just because you weren't declaring it, doesn't mean that you weren't making it, so we're going to make some assumptions here, is my understanding of how they can do it. But once again, I've never been audited, don't know, I don't know.
He was right.
By the way, it's
He
your
is right.
responsibility to hold your, to have your records. They could come in and say, all right, well, everything that you currently hold has a basis of 0. And that is not ideal.
No,
Like, that's,
they won't do that. I don't think they're gonna do that. I think they will try to be reasonable, but, note the word but, it depends how you treat them. If
Right.
you treat them like an arse, you're gonna get the wrong end of the stick, and they will not bend over. They will not bend over backwards to help you. But if you try to work with them, no, they'll be pretty reasonable, most of them are.
Yeah.
But, you said your assets, that's actually what they will do. And I've done it before in previous life. And that's exactly what we did. Is saw how much they had, you just figured out what they claimed, and went on their little way.
Yep. Well, yeah. So, yeah, truthfully, that's my understanding is what they can do, but I have, like I said, I don't know.
That makes sense.
Yep. Anybody else?
We vote for Bitcoin to be Canadian currency instead of dollars, and then
There's no problem. That's right, exactly. Exactly.
The only question I had is, like, so if we sell, that's when it becomes a taxable, that's when we have to basically show in our tax, but if we're buying right now, are we showing anything? Like, if I'm buying $1,000 in Coinbase,
Yep.
am I putting that down somewhere in my taxes?
No, you have to keep track of that transaction so that when you go and sell it, you can say, I bought it for this much, therefore this is, so, you know.
I think
Yeah.
Coinbase does that, they keep track. Do you enforce some of these?
Yeah, but they don't consider any transactions outside of Coinbase. So it's, and I think it's only IRS forms or something that they, like the state side stuff.
Right.
So my understanding is, yeah, they do a good job of what they have on their system, but if you transfer it to another exchange, it doesn't include any of that, so you could end up paying more tax.
And they're telling you here that you need to keep track of account numbers. Have you ever tried to get a transaction ID out of Coinbase?
Right. Yeah. Well, if you're, but if you're keeping track of your Bitcoin addresses, right?
Only their stuff, right? They're really good at what they know, but they don't know what you do on other exchanges, so
Right.
you can't expect them to know. But it's a good, like, it's not a bad base to work from, right?
Yeah.
Now, if you look at this, and I'll tell you what CRA looks like. It's approved the borough. So if, for example, someone goes in and they own a construction company, and they go to, someone comes to them who owns a computer company. Computer company may want some renovations on their house, they may want some computer equipment. That fair exchange, the government wants its money on.
Right.
They're greedy like that.
Yep. Just because you traded for something, what was the value of the computer services? What was the value of the construction? And yeah. So we got cut off. What were we? No, I don't know. Doesn't matter.
Yeah, I think that was it. I think you're ready to move on now.
All right. All right. Well, thanks everyone. And we will put up the we'll put up a link, the link to the document I referenced several times through the on the CRA.
Went up on Twitter account, they don't follow us on there.
Yeah.
Probably
And thank you for whoever caught that, because I was, actually doing this and then going, oh, wait a sec, they actually came up with some good rules for this. This is perfect. So yeah, but it'll be up on it's up on the Twitter feed. And yeah, awesome. Thanks everyone.